Today, the government outlined its plans for capital expenditure over the next 5 years to 2016. Capital expenditure includes all of those things like roads, bridges, railways, schools, hospitals, the physical infrastructure element of public expenditure as opposed to the current expenditure, which wages and salaries and those sort of things. So, yet again, and we knew this from last week's announcement, the capital expenditure budget, like most budgets these days, has been reduced yet again. Just to give some context, at the height of the boom in 2006-07, capital expenditure, annual capital expenditure, reached almost 10 billion a year. Now it's projected over the remaining periods of that 2012-2016 period that it'll be about 3.3. So the spending will be about a third the amount that it was at the height of the boom. Partially offsetting that is the fact that the cost of construction, because the construction industry is so much weaker now, construction prices and costs are lower. So that partially offsets the very big declines in capital budgets that we have experienced and continue to experience now into the future, up to 2012, 2016. The main reason for these reductions clearly has been the dire position of the public finances. The gap between expenditure and revenue, as everyone knows, is enormous, and that has to be narrowed. And one of the ways to do that is to spend less on infrastructure. But both the Taoiseach and Prime Minister today at the launch of this package were at pains to stress the fact that since the turn of the century, 70 billion has been invested in capital projects, infrastructure, etc. So all of that has already happened. And one of the points they make quite validly is that having made such big investments in the recent past, that there is less need for very high levels of investment now. Also, one could say that because the level of economic activity is much lower than it was at the height of the boom, there's also less of a need for infrastructure, and the senior people within the government today emphasize the fact that the OECD quite recently said that the reduction in capital expenditure is warranted given the extreme state of the public finances and the fact that there has been such a high level of investment in the recent past. So the investment package of 17 billion euro over a 5-year period is, as is almost always the case, going to be financed largely by taxation. But there were a number of new things the government mentioned today. There was considerable emphasis on the use of money from the license to run the National Lottery being used for the building of the new National Children's Hospital. The government today made much of the use of the selling of the license to run the National Lottery as a means of financing the National Children's Hospital. Instead of having a 10-year license, as has been done in the past, the government is proposing a longer license, and by giving a longer license they can charge more. So in other words, it's bringing in money from a longer period of time into the future to be able to finance projects. Brendan Howell, the Minister of Expenditure and Reform, also put considerable emphasis on public-private partnerships. This is a way where both the government and the private sector can come together to fund an investment project, and the benefits from it, the financial benefits, accrue to both parties. The Minister also specifically mentioned the idea of pension funds. Many Irish pension funds have money invested abroad, and there is a desire and a potential for some of that money to be repatriated. And if those pension funds feel that the investments in Ireland could yield as good or a better return than those elsewhere, there is a potential to tap into that very large, about 70 billion worth of private pension money that's invested.